All right, all right. Welcome, everybody. My name is Jason. The channel is a chain of blocks. It is Wednesday, August 25th, 8:15 a.m., Los Angeles. Very early, but we're here. We're here to do it. Plenty of stuff to talk about. My dog's moving around a little bit. He's ready to go outside, but yeah, guys, we got some news here. I want to get right into it. We are doing this live stream on TikTok as well. So if you're watching on TikTok, feel free to come over to YouTube. A chain of blocks, guys. You'll see the more interactive experience, screen share, all of that good stuff. But we will start in the market, guys. And there's some stuff to talk about. Let's move over here. We've seen obviously this rebound a little bit, and then so 2 days ago, Bitcoin shot up to about 50,500. Some of the altcoins tended to follow as well. And then yesterday we saw this little bit of a retracement, right? Where Bitcoin fell back down a little bit. We saw, Polkadot, we saw Dogecoin, we saw Cardano even fall back down, even BNB. But it's nice. It's nice when BNB falls to a level of like 485. In my opinion, right? Like, oh, BNB fell down to 480. Oh, Bitcoin fell down to 47,500. It's kind of nice to say that, but we'll get into some of this, what this actually means. You're looking at the top 10 right here. And look, we've started to come back. Almost everybody, actually everybody in the top 10 is positive over the past 24 hours, guys. So let me know your thoughts. I want to hear from you guys. Let's look over here. We got some good mornings. Good morning to you all as well. Where are you guys at? We got April Nabel, and we got Scott S. Vinesh. How are you? C. Parisi. Guys, anybody on TikTok, a chain of blocks, come over and see us. We're going to get into it right now, guys. I want to start here as we're talking about retracements and, things like that. Bollinger Band's creator warns Bitcoin bulls as BTC price struggles below 50,000. So just what we were talking about, let me flash over here so you guys can actually see this. That'll be good for you. Cool. And just what we were talking about, right? We ran up and, but this article goes a little bit deeper, right? So what is going to happen, right? Are we headed back up to 50, 51,000? Are we going to be able to break through there? Well, this article actually says, could Bitcoin be going the other way? Is it possible? Could it hit 41,000? And there have been a few people that have been echoing this statement. One of those people, Scott Melker, if you follow the Wolf of All Streets, or I think Wolf of All Streets, or the Wolf's Den newsletter that he puts out, he expects it to fall towards that $41,000, $42,000 range over the next coming sessions, but not necessarily a bad thing, right? Like we talk about Bitcoin falling, dropping, is it going back up? What is it doing? But he says this actually isn't necessarily a bad thing. So we fall down, right? We ran up kind of abruptly, if you really look at it. I mean, coming from a level, I don't know if this points it out, but coming from a level really in the 30s, low 30s, running all the way back up to that 50 level. It's a huge, huge run up there. And then he's saying it's pretty healthy if we just kind of correct a little bit down to that $41,000, $42,000 range. Heavy load up zone, and then the price will rebound quickly. Another trader as well, I'm not familiar with this guy, but look him up if you like. Crypto Hamster, similar sentiment coming from him. And just saying, Bitcoin could have one more bounce as he's pointing out this. I'll bring this up a little bit larger so we can see. Pointing out this channel that we've been trading in, right? So we had this downward channel, we broke out. And we had this huge run up. Especially if you take this one wick up here, but huge run up, broke out of this channel. But yeah, just running up. Says we could have this one more bounce up to the upside, but then expects a fall back down. And that's where you're seeing this level of support here that we've seen as previous levels of resistance flipped into support right here. Hopefully we'll hold this level of support here, guys. And that's what people are talking about, this $40,000 to $41,000 range we could drop back down to. So if we come back over here, Bollinger Band spotted Bitcoin holding above the 20-day simple moving average as interim support at around 46,750. Nonetheless, Bitcoin break below the so-called signal line, risks Bitcoin towards a lower of 42,671. So if you look here, I'll bring this up a little larger. So here's what we're talking about, but breaking below this SMA line here could fall down to this lower level here. And this is what they're talking about with these predictions. So I don't know. I think for me, I just kind of dollar cost average into Bitcoin. I don't really know how you guys do it. We'll bring back up with the chart. I'll refresh it right here. Got to go through Cloudflare to get the chart. But anyways, so yeah, so rebounding a little bit. I still think these things are going, look, it's healthy. It's not healthy to just go up, so harshly like we did, but it is healthy to have a little bit of pullback. And I want to just touch on this because we love Cardano. Everyone loves Cardano, ADA. Not really a main story, but I just wanted to talk about it as we're looking throughout the market today. First Cardano sidechain protocol running wrapped ADA to be deployed by DSpark. And this is going to run on the Ethereum network, guys. So that's pretty cool. I thought when I saw the story just came out like an hour ago, I don't know when the actual news or the press release came out, but I just found the story as I was preparing. So DC Sparks plans to develop the first sidechain project on Cardano that will make it compatible with EVM, Ethereum Virtual Machine, and which will run on WADA or wrapped ADA. So a way for you to use your ADA, move that liquidity, and that's a lot, guys, as we see just the support for ADA go up, the price go up. There's a lot of liquidity now in ADA, obviously. I don't need to tell you that. It's the number 3 cryptocurrency. But the ability to now take that liquidity and migrate it over to the number 2 platform is very, very powerful, in my opinion. So for Cardano, this is happening through something called, I hope I said Melcometa. So for Cardano, Melcometa will enable the launch of side chains connected directly to the main chain and using wrapped ADA as payment for transaction fees. So how cool is that? You can use now your ADA on the Ethereum virtual machine to pay for these transactions. And you can just imagine that now, as we have smart contracts coming on Cardano in the next couple of weeks, hopefully, you can just imagine what people are going to be building that's going to be able to connect these two blockchains. Because as I've always hinted and insisted and still believe, right? We have Ethereum. We have Bitcoin, obviously, that's a little bit separate. But if you look at the proof of stake platforms, right? We have Ethereum. We have Ethereum soon when it goes to 2.0. We have Cardano, which is coming up, right? And we have Polkadot, we have Solana, we have Cosmos, we have all of these. They don't talk to each other well. So when you start to have these interoperability platforms or mechanisms to connect, it's only going to not only make the systems run a lot better, right? But it's going to increase the capabilities of what developers can offer and what we can actually use this stuff for. So I'm very excited about that. I always love when we get new interoperability enhancements in this ecosystem. And look, when you're talking about doing interoperability, hey, let's start with numbers 2 and 3, right? Like let's connect those two. So I really like that, guys. Let me know what you guys think. Let's take a look at some of your comments here. We got a good evening. Awesome. From Belgium. I love your beer. I love your, if you're in Belgium, I just love your beer. Perrot is my favorite. I know you were asking. Big fan of Golden Drock. Triple Carmelite. I'm not sure if that's actually from Belgium. Love the new Belgium triple. This is all unsolicited sponsorships right here. These live streams are great, man. Appreciate it. Well, I appreciate you, Smart Hustle, waking up early or staying up late, depending. Nino Ward checking in. Awesome. Thank you, guys. Thank you, guys. And Exo Ducur. Tell me how the beer is out there. I mean, it's 8:26, so I probably shouldn't be thinking about beer on a Wednesday morning, but I just hear Belgium. I hear it. All right, this is where I want to go next, guys, because this is something we've been talking about for a while, and I wish I had better news. I don't. The news is, well, kind of honestly more of the same, right? So if you've been following what's been going on with the infrastructure bill in the United States, and I'm not going to, because YouTube gets very upset, and some of you guys get very upset when I use profanity. And sometimes when I start going into this infrastructure bill and how Congress deals with things and the Senate, I go nuts. So I'm going to really calm myself. No profanity here, I promise, but infrastructure bill set for a vote by September 22nd, and this is the important part, with no changes to the crypto tax provisions. So they voted the controversial $1 trillion infrastructure bill will see a vote in the U.S. House of Representatives, already passed the Senate a couple of weeks ago without any amendments to the crypto tax provision. And this is by September 27th. Nancy Pelosi said she wants to pass. Look, we're all very excited. We're all very up in arms about this infrastructure. But I understand why it has to pass by the 27th, right? there's other things in here besides the crypto. The crypto thing should not be in here at all. It should have absolutely nothing to do with this bill, and then they should just pass it. But the fact is, it is up in this bill, and it's completely vague and wrong. And what we talk about is people want to comply with crypto laws. They do. They just absolutely want to do it. But the problem with the crypto laws, they don't exist. One, when they do exist, they're super vague. Two, you can't do it. They're asking for something that's not possible within the confines of what cryptocurrency offers. So the vote was agreed on after the House narrowly approved the Democrats' $3.5 trillion budget. Oh, that's good. Let's print some more money. Blueprint vote 220 to 212, and that they voted basically to include no amendment. So it's not that they're just passing on the crypto amendment. That actually was the number one amendment that was probably going to be looked at first and maybe agreed to first by the House. But no, they're just like, hey, clean slate, nothing. We don't care. Some of us do. I don't want to put everybody into this basket that they all don't care. There were some good players in here. Obviously, there were some terrible players in here when we look at people like Richard Shelby, who was the only person in the Senate that said, hey, yeah, I'll pass your bill, but you got to give me $50 billion to go spend on my military. So it's very frustrating. But Nancy Pelosi said, I am committing to pass the bipartisan infrastructure bill by September 27th. I do so with a commitment to rally House Democratic support for the passage. It's a tough one. It's a tough one. I don't really blame her at this point. I think she's kind of doing what she actually needs to do, which is get this thing moving, because whether we're going to do it or not, whether you like her, you don't like her, it's not really what I'm talking about here. But yeah, I wish we were just doing a little bit better. Oh yeah, you should definitely send me some beer. It's definitely going to be expensive. Yeah. Oh, Carmelite. It's just fantastic. So me and Exos DCR, we'll take this offline after this. I don't want to ruin everybody's time here as we talk about beer at 8:30 in the morning. But yeah, let me know if you guys have any comments on Congress. I was riled up. I'm fired up about it. It's kind of a done deal at this point. I think it's just going to happen. And look, when we saw this happen last time and we thought it was really bad news, it is bad news, but it didn't really have an overall effect, I don't think, on how things have. Actually, it really spurred the market a little bit, is what I think. So, guys, I need a little coffee break here. Just one sec. All right. All right. We got beer conversation in the comments. All right. If you're on TikTok, I'm over here on YouTube. It's a much better stream. I hope the stream on TikTok is good, and I appreciate everybody for stopping by. We're doing the screen share. We're doing the whole daily update thing, guys. So come and check us out at Chain of Blocks on TikTok. Let's keep it moving. We don't waste any time. We've been going for 13 minutes, and I want to get you guys out of here in about 30 minutes. Not from now, total. We don't want to waste your time. So I want to come over here. We'll talk a little bit. So, I think one of the reasons you guys come here is because there's a lot of homework to be done. And you guys are busy. You're working today. It's a Wednesday. Most of you got plenty of stuff to do. You can't come in here and look at all the stories and follow all your cryptocurrencies, all your altcoins. So that's what I'm doing for you here. And I talked about another AI yesterday, but Fetch AI is really catching a lot of attention right now. Fetch AI, Bancor, and two more altcoins, headline assets, while heavy whale accumulation. And this is according to sentiment. And sentiment basically, so I always tell you guys, what I love about crypto, blockchain, is that everything transparent. You can see everything that's happening. Excuse me. And that's how sentiment gets this information. So they can see when people are accumulating different cryptocurrencies, what those cryptocurrencies are, how much, which ones. So crypto analytics firm Sentiment says that deep-pocketed investors are buying up Fetch AI, Bancor, and two more altcoins. Those two altcoins are the Graph, which I've mentioned on this channel, MakerDAO, and Engine. So the number of whale addresses have grown for many assets and fallen for others, looking to get into projects where large addresses numbers have been rising. Yeah, and that's what it's really about, right? It's not rocket science. People come in, buy large amounts of something, hold it. Now, whatever exchange, whether they do it on a centralized exchange, whether they do it on a decentralized exchange, that exchange has less of the cryptocurrency. Therefore, the price changes, right? You have, because that's all it is, right? It's a liquidity pool with Tether and Fetch AI. And if somebody takes more Tether or more Fetch AI, then we got to adjust the price, right? So I thought that was pretty interesting. And obviously, if you've been following my 1 to 1,000 altcoin series, or not altcoin series, but just turning 1,000 into 10,000, investing in cryptocurrencies, you know that we're giving out some different projects, obviously, and look for the things like that. And I've mentioned, obviously, Maker, obviously it's a DAO, decentralized autonomous organization. And we got Krumrul, fetch from day one. Awesome, buddy. You like it. I'm sure you're up a little bit of money. Nino Ward is in lockdown. I apologize for that. And we're going to arrange something with the beer for those of you who are interested. Okay. All right. Let's keep it moving. Let's keep it moving here. So, yeah, this was another story. Found this one interesting. If all the banks, right? Like, first you knock us, you tell us how shitty crypto is, how it's just for scams, it's just for money laundering, it's just for drugs, and all of a sudden, you all want to play the game, right? Citi awaiting regulatory approval to start trading Bitcoin futures on CME, which is the Chicago Mercantile Exchange, and they're kind of going about it a little bit like nonchalantly. For a long time, they didn't even let you buy Bitcoin with your Citi card. Like, you couldn't even use your Bitcoin or your Citi debit card to go buy Bitcoin. You know why they told you? Because it's too dangerous. It's too dangerous for you. You can't do that. We can't allow you, our customer who we care about so deeply, to go buy something that's so dangerous for you. It's going to cause you so many problems and harm. It's just, this is so bad for you. And it's so high risk. Meanwhile, feel free to go buy, as much alcohol as you want. Go buy those prescription drugs. Go buy cigarettes. Go buy all these things that are known to actually kill you. But cryptocurrency is very, very dangerous. And it's dangerous because it can put us out of business, as we all know. But now, we're not just seeing this, obviously, with Citi. We're seeing this with Wells Fargo. We're seeing this with B of A, Chase, JP Morgan obviously owns them. According to a report by CoinDesk yesterday, Tuesday, August 24th, an anonymous source within the bank revealed that Citi is working on receiving the regulatory green light to begin trading Bitcoin futures on the CME, the Chicago Mercantile Exchange. And this is their quote. Given the many questions around regulatory frameworks, supervisory expectations, and other factors, we are being very thoughtful about our approach. And we're moving slow. And we are presently considering products such as futures for some other institutional clients as they operate under strong regulatory frameworks. So, I think this is just going to be the trend, guys. Late to the party, coming in, trying to steal the ball from everybody. They have more money than everybody, but I just think that this is what we're trying to get away from. Like, if you want to go and trade futures, find that's fine, right? You like that thing. That's not my thing. I'm more of holding Bitcoin for the long-term value. I see the intrinsic value of this, but I understand that that's there. But I don't think that we need a really large involvement with banks. So what do you guys think? What do you guys think? All right. Not much going on in the comment section, but all right, guys. So let's take a look over here. Let's see what's going on. Catch up on the market here. Do a little refresh. Can't load CoinGecko. Try this. All right, sitting pretty here. Binance BNB back over 500. And look, I think what you're going to start to see now, I've said this, continually. Obviously, I like Polkadot. I like what they're doing. I hold the others as well. Big holding in Ethereum, Cardano, BNB, all these others as well. Not so much actually no XRP, no Doge, and I'm dollar cost averaging into Solana. I actually still, for Uniswap, because I don't know if you remember when they did their swap, I still hold some of those swap tokens. I gave some away on crypto giveaways, but I still hold quite a few of those, and I've bought some as well. And if we move over here, guys, I want to finish up. Let's go over here. Talked about this a little bit yesterday, and OnlyFans came out today. OnlyFans boss explains how aggressive banks forced it to drop adult content. And yeah, no questions asked there. I totally knew that was what was happening. But Tim Stokely, CEO, founder of OnlyFans, has explained how banks had forced it to drop adult content from the subscription-based platform. He said basically they had three big banks. I think they listed them in here, but it was, Bank of New York, Mellon, Metro Bank, and JP Morgan Chase basically said, we're not going to process your transactions. And this happens a lot in the credit card industry because it's completely centralized and you're relying on one company, bank or Visa or MasterCard, whatever it is, to say, yeah, we want to approve you or accept you as a merchant, or we don't. And if they don't, good luck, because you can't accept credit cards. And we know if you can't accept credit cards in today's day and age, you cannot do business, whether it's online or anything else. And while these banks will say they're looking out for their customers again, right? Well, we're looking out for the best interests of our customers. We don't want them to be, viewing content that could be deemed inappropriate. That's just not the case at all. Banks have very strict chargeback regulations and requirements in place. And the only reason that these banks are now coming out against OnlyFans and saying that we're not, do you think the banks are turning down the money? OnlyFans bringing in tons of money. They're not going to just turn it down because they don't want the money. The problem is chargebacks. So as customers, maybe there's credit card stolen, maybe it's little kids that take their parents' credit cards. We don't know exactly what it is, but as this is happening, people are charging back these payments, and the bank then has to go back and refund the customer, and that works badly against the merchant. And eventually, after a certain amount of chargebacks, you will get shut down by different credit card processors, and that's most likely what's happened here. But as we talked about yesterday, you're going to see decentralized platforms pop up that replace OnlyFans, and not just for explicit content, adult content, for all this types of content, because the creators want to be reimbursed and compensated in a fair way. OnlyFans taking 20%. You're going to have Tyga now coming out with My Star in October. He's only taking 10% adult content permitted. So you have that. And then this was interesting. Speculator turns $1,100 into $3.35 million selling Fidenza number 313 NFT. Crazy. Just absolutely crazy. Here's what it looks like. I know, $3.35 million for this, guys. Get into NFT art. That's really all I can tell you. It just says OpenSea username Pizza Ale originally paid 0.58 ETH 2 months ago, which was about $1,100, and sold it for 1,000 ETH. I think this was yesterday or 2 days ago. Crazy profit. Wow. Fidenza collection launched in June this year and comprises 999 different NFT artworks. Are all of them going to sell for that? Amazing. Last story on my day. Last story we're going to talk about. 1 in 10 people in the United States invest in crypto, and this is according to a survey. And it was according to a poll from CNBC and American chemical company Momentive. Published this month, 5,530 respondents cited various reasons why they decided to invest. 60% of U.S. crypto investors cite the potential for long-term growth and being behind their investment, with 44% potential for high growth in a short period. And I think, what people, if it's your first crypto investment, I think what you might start to realize is, you kind of buy it for the growth, right? You want to make the money, you want to 10x, you want a 100x, you want all this money to come back, all this ROI. But I think once you start to see this and you buy Bitcoin, get your feet wet a little bit, then maybe you move over, you buy an altcoin, maybe you buy some ETH or some ADA or something like that. You start to understand the real power of this and what it actually does and the use case behind it. Not so much if you're buying Dogecoin on Robinhood, it just sits there, it's nothing. But if you're buying one of these ones, maybe it's a governance token, maybe it's gas for a network, maybe you buy some cake and you can go interact in a DeFi landscape. So when you start to understand the power behind these things, it becomes more than just a 1,000 or a 10,000x investment possibility, in my opinion. So let's go over here, guys. Actually, that was the last story. I'm going to check in on the comments. We'll wrap it up here. We went for 24 minutes. I hope you guys enjoyed it. All right, let's look at these comments. Yeah, there was definitely some FOMO over the past couple of days, I think. Look, and that's normal, right? We saw, greed, the greed index at a level of extreme greed. We saw, even though Google Trends search data wasn't up for Bitcoin or necessarily cryptocurrency, it was up for some of the altcoins that were experiencing Cardano, ADA, Solana, some of these as well. I would imagine that FET and Fetch is going to attract some attention right now. The U.S. government is in epic failure mode. They've been in this mode that you're speaking of for a while. My lifetime for sure. It's funny, and I don't want to digress, but I always remember, if you're not in the U.S., but this may not, and I don't want to tangent too much, but when we used to have my video went out. Oh, okay. I'm getting better at the live streaming. Before we had no picture. Now it just goes out after 24 minutes. So clearly I'm getting better. And what I was saying is when we used to have these presidential elections, right, they used to debate, right? And the debates have been so ugly in the past couple, right? But they used to have these debates and they used to say one of the big topics was who could balance the budget, right? That was always I'm going to balance the budget. The budget will be balanced. I don't even talk. That's like saying I'm going to find a pink unicorn. No one even talks about that anymore because the budget's just so ridiculous. I don't even know where I got off on that tangent because you're talking about our government in epic failure mode. That's what it was. And they are completely epic failure mode. Have been for a while. I don't see it getting any better. And to be quite honest with you, that is my opinion why I think they're so against cryptocurrencies and they don't even know it yet. Because not just Bitcoin. They only know about Bitcoin because they hear about it, right? They're stupid. All of these decentralized protocols, these decentralized autonomous organizations that now focus mainly in the finance space will move to other areas. They already are moving to healthcare. They could replace our entire government, right? Protocols over people, guys. Less trust in people equals more truth in information. That's the Polkadot way. Okay, let's read some more here. If you're good funds long run, okay. I'm always curious how much influence the whales have on the crypto markets. Yeah, me too. And I think it's a lot, right? But I think it also happens in traditional finance with stonks. But I think it's becoming less, right? As more and more liquidity flows into these markets, it has to become less, in my opinion. So credit card fraud, absolutely. Just wait when everyone realizes there's, COVID-19. Yep, many will invest in Bit. Yep, that happened last time. Where is the free giveaway? Oh, Kamrul, did you miss it? No, I'm just joking. No free giveaway this time, guys. I'm still waiting on Ross. Fargy claimed his yesterday. I do the free giveaways kind of when I feel like it. If you're new here, we give away crypto sometimes. Hopefully you're here for more of the information and less for the giveaway. Does MyStar have a coin? I don't know. I'm going to look into that. Good question, Rich Action. That would be a good one. If they had that would be an issue. It shouldn't pay the fees, but it should be governance. And that would, I think, what do you think? I think that should be a governance one on the network there. So Arkin, not familiar with Arkin, sorry. Debates are meaningless. Fraudulent elections, yep. Yeah, so I don't know that the elections are fraudulent. I wish that our elections, our voting happened on a blockchain so then I could do it at everyone's up in arms that we're going and doing it in the mail or I just want to do it on my phone like I do everything else, have it on a blockchain so I know it's secure, immutable, and nothing's going to happen, right? I think we could all agree that's the best way. No one can argue. You can't argue. Right? We log in with a private key. I don't know. But the only salvation for the United States is to self-cannibalize to adopt crypto. Well, that's interesting. Okay. Guys, I appreciate everyone stopping by today. Let me know what you guys think. We're doing another one tomorrow. I'm going to get a haircut, so I'll be nice and trim. Until the next time, be safe.